And in our top business story, demand in Dubai's industrial market remained buoyant in the first 6 months of the year, with occupiers moving and expanding their operations in greater numbers towards Dubai's south. International real estate consultancy Clutton's Dubai Summer 2016 Industrial Bulletin shows that with the seasonal push for logistics contracts heading into Q3, key areas such as the Jebel Ali Free Zone Authority and onshore locations such as Dubai Investments Park continue to command a great share of occupier interest. While Dubai's logistics city in Dubai South is one of the largest industrial sub-markets under construction in the UAE and has already attracted a number of high-profile occupiers, including Integrated National Logistics, Emirates Sky Cargo, Aramex and Panalpina. According to the consultancy, rents for Class A units in areas around Al Maktoum International Airport now stand at 60 dirhams per square foot, the same level as at Dubai Airport Free Zone. The latest research also shows that Dubai's most expensive area for Class A and Class B industrial space is Silicon Oasis, where rents stand at 77 dirhams per square foot and 65 dirhams per square foot, respectively. Jebel Ali Industrial Area remains the most competitive area for Class A space, with rent standing at 35 dirhams per square foot, while secondary space at Jebel Ali Free Zone is the city's lowest at 24 dirhams per square foot. According to Clutton's report, activity levels are also rising in new locations across the city, including Dubai Science Park, where a second phase of warehouse space has been commissioned and is expected to be completed in 2017. Real estate investment and advisory firm JLL has released its second quarter Abu Dhabi Real Estate Overview report that assesses the latest trends in the office, residential, retail and hospitality sectors. JLL reported that after 18 months of relatively stable conditions, with the lack of demand growth being matched by minimal growth in supply, the market is now starting to show initial signs of declining performance. According to the report's authors, demand has been weak since the decline in oil prices at the end of 2014, impacting the oil sector, government spending and general sentiment. However, while demand is down, annual supply completions have been at an all-time low, leading to relatively stable market conditions over the last 18 months, characterized by low vacancy rates in high-quality stock and prime rents generally remaining stable across each asset class. JLL added that during Q2 2016, it has started to see the first signs of a downward trend as the decline in the oil sector, reduced government spending and weak sentiment continues. JLL reported that the oil sector comprises half of Abu Dhabi's GDP, and as such, the reduced oil price and the announcement by ADNOC that it plans to cut 5,000 jobs by year-end has had a major impact on GDP and employment growth. The Bank of Sharjah's net profit for the first half of 2016 remained static at 176 million dirhams as it reduced issuance of new credit. Total assets for the bank reached 26.289 billion dirhams, a 2% decrease over the 26.946 billion dirhams for the corresponding period in 2015. When compared to the December 31, 2015 balance, total assets decreased by 5%. Customers' deposits reached 18.2 billion dirhams, a 2% decrease over the 2015 balance of 18.63 billion dirhams, and the Bank of Sharjah's loans and advances reached 15.554 billion dirhams, 1% above the 2015 balance of 15.459 billion dirhams, and 3% more than the December 31, 2015 balance of 15.037 billion dirhams. According to the bank, its net liquidity remains high compared to industry levels at 5.629 billion dirhams, which is 10% less compared to the same period of 2015. Total equity as of June 30, 2016 stood at 4.781 billion dirhams, while its earnings per share for the period were down by 2%. And Sharjah Islamic Bank has said its second quarter income increased 28.5%, boosted by investments, fees and commissions. The gain came despite a decline in income from Marhaba and leasing, the Islamic banking equivalent of the interest conventional banks make. Net income rose to 125.6 million dirhams compared to 97.7 million dirhams a year earlier, and investment fees, commission and unspecified other income increased to 159.4 million dirhams from 82.9 million dirhams. Meanwhile, income from Murbaha and leasing decreased to 204.5 million dirhams from 208.2 million dirhams.